Good day, ladies and gentlemen. Welcome to the Sunday Weekly Focus. So, for this week, I am looking for EURUSD. Classically, I am bearish for the dollar. I'll be looking into buying EURUSD, selling the dollar. Anything against the dollar, I will be selling. And buying the euro. Mostly, I prefer buying the euro. And I think another one, it's selling the dollar. But I'm going to use the dollar CHF. So I'll be bearish for the dollar, and I'm hoping the dollar will continue for the rest of the week or for the rest of the month, given what happens in the fundamental space. But anyway, let's get into it, man. Let's just quickly go through the fundamentals, why I'm looking for this trade. So I am looking to buy EURUSD, and I'll also look at the technicals of it. I'm going to also look at buying the dollar, New Zealand dollar with the over the American dollar. Also, NASDAQ is still bullish. I'm going to look at NASDAQ as well and gold. They are still bullish. They are still interesting part of the trade that I'm looking for, including EURUJPY, and on the bearish side, I'm looking for the dollar CHF and the dollar yen. And the dollar yen. That's what I'm looking on the bearish side. And the reason why I'm very, very adamant in selling the dollar right now, it's because of the fundamentals are saying that it's time now we get rate cuts. And if we're to look at the inflation, I think the inflation has stabilized a bit for the past few weeks. The inflation is at 2.4, if I'm not mistaken, for the past month. So inflation, there is a clear slowdown in the US economy. You look at the inflation, it's at 2.4%, even though the target is 2%. But if you look at inflation in correlation with other economic growth, I'm gonna look at do I have it here? I'm gonna look at retail sales. So I'm gonna compare you're gonna look at inflation with retail sales. So in this instance, you see that inflation is stable between 2.3 and 2.4, but when you look at retail sales, there was a mega miss in the inflation story. I mean, in the retail sales, it's a direct contributor to inflation. Look at that; it's minus 0.9, which is an indication of a serious slowdown in the U.S. economy. Also, consumer confidence as well. There seem to be a clear direct that. Look at that. We're coming from all these highs. Now we are at 93. So we have a clear slowing down of the US economy. The other one that I wanted to see was GDP growth as well. In the previous quarter, I think there was still in the negative. Look at that. Last week came out. This is bad. Minus 0.5 GDP growth in the US. So the GDP growth was also terrible. So all this, when I look at all this, to me, they are saying that it's time for Powell to cut rates, man. Is it time to cut rates? Is it time to still send the dollar lower? I think so. You're looking at the economic growth, it's not as good. GDP, it's at negative 0.5. Retail sales, it's at negative 0.9. So the only thing that I feel like it is holding us back to getting rate cuts within the next two meetings, I think it's labor data. The labor data is still very stable. It is very stable. So there is no worry about the labor data. However, if we were to look at the labor data, there is labor data coming out this week on the ADP non-employment on Tuesday. So it looks like the non-employment is good as well. Jobs opening, I think that's very important. So when you look at the labor data, also have to look at the jobs opening. If we get a very big miss on the jobs opening and the NFP numbers, we get serious big miss given the GDP growth, retail sales. I will say we are gonna likely to get rate cuts in the next two meetings. Whether this year we're gonna get one or two rate cuts, but we will see that. So that alone, what I've just said, everything it sums up the idea that why I am bullish for Euro USD, I am bearish for NZDJ. I am bearish for the dollar and I'm bullish for the other currencies. And also gold starting to get a good bullish reading. And before we go to the technicals as well, I think I'm very interested in looking at institutional positioning. But I'm going to look at just COT data for this week that was reported on Friday. What did the institution do before we go further into technicals and what I'm looking for technicals? And I call it a day. Look at that. Look at the amount of long contracts they ended on the New Zealand dollar. That's what I'm saying. The New Zealand dollar looks like a good bull, and I'm looking for longs on that for this week. They just added a lot. Also, NASDAQ, they added a lot on US oil as well. I think that was coming from the fact that there was a war uncertainties with the war. And then also so now with Nasdaq, they closed a lot of short long contracts and a lot of short contracts. So they were closing. Seems like they were taking profit, but I wouldn't be sure. And on the bearish side, look at that. That they are just selling. They're adding a lot of short contracts on the dollar and Dow Jones as well. It's not looking good for it. But look at dollar. The dollar is one of the most bearish currencies in this instance, and we are slowly starting to position in for the rate cuts for this year. So for that, I am bearish for the dollar because remember, if we get rate cuts, we're gonna get the dollar to still depends. And I'm gonna look at the first pair that I'm gonna go through is USDCHF. Um, we just broke up below this resistant area, I mean support. So once we retrace back to this support, to this resistance, sorry, we just broken support traded lower. So I want to use this high as a support or as a resistance, sorry, to go short for USDCHF and also for USDJPY. I am looking for the same thing, but for USDJPY, they seem to be a bit of they seem to be a bit of consolidation in a way. So my game plan here for the coming in this week is either I'm gonna look for shorts here as it comes back for this resistant area. I'm gonna look for shorts and come all the way down to the low, or another plan that I will have if we continue coming lower. Oh, sorry. If we continue coming lower, I'm just gonna just not take that trade. However, look for a trade like this. So a break look for a if you break below this low, and I'm going to look for it to hold as support, then I look for continuation lower. So that I think for the dollar, those are the two pairs that I'm holding. I mean that I'm willing to buy this coming week. But also I spoke about how bullish is the NZDUSD. So here my worry is we are holding this resistant area. So it's either I wait for a retracement lower to buy there. So I think the game plan here is too long as it comes back for this retest to get a good risk to reward, to look for long. Or another thing that I can do, and I think I'll be looking for as well, it's if we break above this resistant area and use it as support to look for a continuation higher. So I think I'll be waiting for that one of the two to happen. And I think the major one and the good one that is giving a good bullish reading. I always got these things wrong. I need to start arranging them better. It's EURUSD. For EURUSD also, I am gonna wait for the market to pull back lower and push back to the upside. I think that makes sense. I'm gonna use that as this demand area as my support to look for longs on EURUSD. And I love how it's looking like. I think it's a very stable, very good move to the upside, given that we are likely gonna get rate cuts. And always remember when we get rate cuts, the dollar gonna continue going lower because in terms of interest, you don't earn interest. And I think then if we were to look at the 10-year treasury yield, then you'll see that 10-year, if you look at 10-year treasury yield, I don't have treasury futures. I need to look at bonds. So if just gonna choose any. So if we look at there's another one. Okay, here we go. So if we're to look at 10-year treasury bonds, come on, man. You can see that we are starting to come lower we are just coming lower on the treasury on the 10-year treasury yield. And chances that when you start seeing a retracement in treasury yield, it's an indication that the bond market already is starting to price in for the rate cuts. They are getting ready for the rate cuts, and you see such move coming lower. But also you'll have this big bullish candles that will come through along the way. That could have been a slight change in the overall market in terms of rate cuts. Look at the war now, the tariffs as well was giving a bit of uncertainties with rate cuts. However, if we look at this data frame, we are starting to push lower. Yeah, if you look at that, we are going lower. So that's an indication that there is high possibility of rate cuts and the bond market. It is pricing in for the rate cuts. So hence I'm bearish for the dollar. Um, However, I'm gonna start looking for longs for gold, and I think so. I've taken a break-even trade. Yeah, I've taken a break-even trade. So this is how I tried to play gold the previous week. I tried to long gold there. Stop loss was below there. I went out and I re-entered again on where my stop loss was. Stop loss was below there and just taken me out. But honestly, I still love the bulls as much as I've taken those losses, one loss on one break even. I still prefer gold here. If gold comes back all the way down to, I'll tell you now, to 3,246 ounce, then I will look to try to long again. I think the game plan here will be try to long gold as we come back lower. But remember, I am not just going to jump in and long. I will be really focusing also on what's happening in the macroeconomics side. Besides that, there is definitely, or not indefinitely, but there is high possibilities that we have stopped with the war for now. There is ceasefire. So now, what will be pushing gold to the upside? And if we look at earlier on, I spoke about the microeconomics. We saw that we saw that a lot of in terms of the US market, the US market starting to price in for rate cuts. Look at retail sales, it's on negative. GDP growth is on negative. So there is a direct slowdown in the US economy, and that is very bullish for most stocks. And that also contributes towards gold as well. So we are, and I am personally moving into risk on asset, given this, given what I just said now. So I am gonna move in on risk on asset, and if gold does that, I am gonna definitely buy gold. And the last things that I'll speak about, it's indices. I'm just gonna fully focus on NASDAQ right now. We have already traded above the all-time high on NASDAQ. We've already traded above the all-time high. So I am just gonna look for a good lower retracement there and look too long there. But if that doesn't hold, I am gonna try on these lower prices as well. Given the fact that this will hold as support, that's what I'm thinking. And red cards are coming, and that's why you're starting to see that we are moving into risk on asset, and an indication of that is to look at NASDAQ or US indices. They are very bullish. That's why we're trading at an all-time high. And I should say, from when the market was scared to now. So this is someone, and I think I've noticed this for the longest time. From when the market got scared to the lowest point, it took about for this retracement, it took about 57 days. However, a push to the upside takes longer to recover back all the losses. It took about 81 days. So a very bear market is it's very bear very fast, but the recovery is slowly and gradually. And that's what we have seen. Even if we were to go back before, it's very quick to go down. Look at when the market got scared during the carry trade. Look at that, took about 63 days, but the recovery to the upside was longer. So these things happens always. If you want to see, if you can just go back to during COVID as well. So when the market gets scared, it just sells first. People just close positions. They start selling with fear, and when there's too much fear, and then we start to go back and retrace back to the upside. I think this is what we see. But for me, my game plan here is to push the market to the upside is to push market to the upside. So that's my prediction in terms of trading. And I think those are the things that I'm looking for coming come into this week and going forward. Also, I remember the trade that I took that didn't go well on Bitcoin, but also the last thing that I'll speak about Bitcoin, we're starting to see the recovery in the Bitcoin. And Bitcoin also, I define Bitcoin as a risk on asset as an asset as well. I mean, when there is too much greed in the market, that's when you see Bitcoin moving to the upside. People are happy into putting more risk. But now, when the inflation is higher, the economy strains, now you start to see Bitcoin retracing lower because now there's high inflation, things are expensive. So now inflation is lower, it's very stable. We're likely to get one or two rate cuts, but now I'm already starting to price in for rate cuts for the year. That's why I am bearish for the dollar. Other than that, um, I'm gonna start to stream more, guys. Thank you so much for joining me. Have a great day. Good luck for the coming weeks in trading. I love you all. This is a Horror Formal Trading Show. We'll be trading the PM session almost every single day. Have a great day, guys. I love you.